Markets on a high on India's G20 summit being a huge success. We saw the Sensex surpass the 67,000 mark and the Nifty hit an all-time high of 20,000. And of course, we saw economy-sensitive stocks such as metals and infrastructure surge sharply, along with all heavyweights, all banking stocks, Adani major stocks outperforming through the day. So for those wondering what are the factors that have impacted the markets from the G20, well, here's a quick roundup. As per market experts, of course, they have cheered the India, Middle East, Europe Economic Corridor launch, India's digital public infrastructure framework being recognized, the agreement to triple energy capacity by 2030, India-US pledging cooperation to build resilient semiconductor supply chains, and a sentimental boost for markets as well coming from the Africa Union inclusion and the adoption of the Delhi Declaration. So how will each of these factors impact markets going forward? Now, as per experts, the India, Middle East, Europe Economic Corridor launch will boost trade, exports and employment. And the Digital Public Infrastructure Alliance will ensure transfer of skills from India to other nations. Analysts also believe the agreement to triple green energy capacity by 2030 will be significant for jobs in the rural sector and the overall environment. Remember, India and US have pledged cooperation to build resilient semiconductor supply chains, and now this is crucial as economists feel this will boost manufacturing, in particular for the auto sector. And now with markets rejoicing the success of the G20 summit, the spotlight is all on the goals that have been set.
So it's a very novel initiative and a very well-timed initiative to boost our trade and investments, because that is one major challenge that we are facing, because investment is mainly being driven by public investment. So we need to find more avenues for Indian businesses to expand their remit and search for newer markets. So I think in that context, this is a very well-timed initiative. With the Middle East, we would always want to have good relations so that our oil supply is also not very costly. So I think geopolitical wise also it's a very well-timed and prudent move, and it will help us to explore more markets in Middle East and through Middle East to European nation. So both from the perspective of inward foreign direct investment as well as outbound foreign direct investment, it will help in boosting trade and investment, because trade in goods is currently subdued. So we need to find more markets, and in that context it's a very useful step. It comes at a time when China is trying to step up its initiative and expand its remit of the Belt and Road Initiative. So in that context also it's a very well-timed move, because it will help in boosting our trade and investment, help in boosting rupee trade also going forward, because with UAE and other countries, Saudi Arabia, we are trying to push that aspect also. So in through all these steps, we can see that it's a well-timed move, and therefore markets have responded positively to it.